You probably wonder to yourself, how many things out there do I not know about regarding insurance? Well, no need to worry, because we have the most interesting facts you may not know about insurance. Keep watching to discover 10 hard to believe and interesting facts about insurance, which we will dive into in this video. The universe of insurance is definitely more fascinating than you presumably might suspect it to be. For instance, in Japan, golf players have purchased golf insurance just in case they ever hit a hole-in-one, as they'd need to go through a great deal of cash purchasing beverages and presents for many individuals. Then, a few people's body parts have been protected, with Kiss bass player Gene Simmons once having his tongue guaranteed for $1 million. Here's a look at 10 astounding and fascinating facts about insurance, some of which you might need to follow up on, as they could save you some cash. Number 1. Your home insurance presumably covers damage from volcanoes and meteors. You may realize that your home insurance doesn't shield you from flood damage, yet you may not completely appreciate all that it shields you from. Home insurance policies normally cover damage from volcanoes and even meteors, for instance. Like flooding damage, however, earthquake damage is typically not covered. It's ideal to closely read over your policy or talk with your agent to find out precisely what is and isn't covered. This will allow you to choose whether you need to add some other coverage, for example, for earthquakes. Earthquakes can happen in unforeseen spots, as you may know, as an extremely enormous one happened sometime in the past in Missouri. Moving on to number 2. Reducing pointless emergency room visits can cut medical care costs down a great deal. Numerous visits to emergencies are not genuinely emergencies. People going there may rather be treated by their family doctors or maybe at an urgent care facility. Emergency rooms are expensive. It is assessed that more than $18 billion could be saved every year if those patients whose clinical issues are considered avoidable or non-critical were to exploit essential or preventive medical services and not depend on ERs for their clinical necessities, as indicated by the people at debt.org. Blue Cross and Blue Shield of Rhode Island, for instance, as of recently found that 40% of the emergency office visits it covers, speaking to about $90 million in care as of 2018, was pointless. It had the option to diminish emergency room use by a few percentage focuses, rising to about $4.5 million in cost cuts, accordingly saving the one providing the insurance and ultimately the insured cash. Another significant outcome is that emergency rooms end up less swarmed and the individuals who really should be there might be seen much quicker. For number 3, your credit rating can altogether impact your insurance costs. You presumably think about credit score assessments that impact the home loan financing costs you're offered, yet you may not understand that there are credit-based insurance scores that impact the insurance expenses you're quoted, and in some cases, quite significantly. As per Fair Isaac, the organization behind FICO scores, about 95% of all vehicle insurers and 85% of all home insurers utilize these scores when allowed. A couple of states, for example, California, Maryland, and Massachusetts, restrict or deny their utilization. The organizations are calculating that scores reflecting how you manage your cash are probably going to likewise recommend how likely you will be to file insurance claims. A report by the people at thezebra.com discovered drivers with helpless credit may pay twice as much for vehicle protection as those with outstanding credit. Broadly improving your FICO rating from the poor to the exceptional reach would save you 53%, or about $1,400 every year. Fortunately, you can find a way to build your FICO rating. Jumping into number 4. Home insurance policies frequently deny certain dog breeds. Many home protection approaches frequently preclude you from having particular kinds of canines as pets, in light of the fact that they can possibly cause issues. Some 4.5 million individuals are bitten by canines yearly, and about 20% of canine bites require clinical attention, as indicated by the Centers for Disease Control and Prevention. Every one of that costs homeowner insurers a great deal. In 2017, they revealed $686 million in liability claims identified with canine bites and other canine-related injuries, as indicated by the Insurance Information Institute and State Farm. Canine breeds normally rejected from standard policies include Akitas, Mastiffs, Pit Bulls, Alaskan Malamutes, and Rottweilers. In the event that need be, you can pay extra to add coverage for your canine, or by looking, you may find a policy that covers it. Car insurance for male teens can be shockingly expensive. School costs aren't everything you'll face as your teens begin driving. You'll additionally have to have them covered through vehicle insurance, and that can be very costly. The people at insurance.com have stated a parent adding a male teen to their policy can expect their new rate to run as high as $6,186, and in some cases 227% higher than insuring an adult driver alone, and a teen buying their own policy can be even more expensive. 16-year-olds have twice the accidents as 18 and 19-year-olds, and adding a 16-year-old to your policy can cost you as much as $3,000 or $4,000 or more, respectively, for a young lady or a man. In the event that you need such insurance, look around as rates can generally differ. Getting into number 6. Some businesses offer medical services for parents or guardians of workers. Numerous Americans get employer-sponsored health care for themselves and their partner, or themselves, their partner, and their kids. That's a guarantee. In China, however, Starbucks has taken employer-sponsored medical coverage above and beyond, offering to cover the parents and guardians of workers. It's restricted to workers who have been with the organization for a minimum of 2 years, and it gives basic disease coverage to nearly 30 illnesses to parents or guardians who are below 75 and living in China. It appears to be a shrewd business move in a nation where numerous workers feel they must care for their parents and guardians, and it can make Starbucks a more competitive employer. It's not inconceivable that new kinds of insurance will be accessible to Americans as well. For example, we didn't always have pet insurance. Now at number 7. Many Americans think the Affordable Care Act and Obamacare are unique. The start of the Affordable Care Act, otherwise called Obamacare, was met with open resistance from numerous Americans, alongside solid help from numerous others, and numerous Republicans that have been attempting to destroy or debilitate it for quite a long time, with some achievement. An intriguing finding en route, however, is that a large number of Americans don't appear to understand that the Affordable Care Act and Obamacare are something very similar, and quite a bit of those who don't care for Obamacare do like the Affordable Care Act. A 2017 survey by Morning Consult found that completely 35% of respondents said that they thought Obamacare and the Affordable Care Act were varying policies, that being 17%, or they didn't have any idea whether they were equivalent or unique, that being 18%. Moving into number 8, Obamacare is accomplishing more than making medical care more open. Something else that many don't exactly acknowledge about the Affordable Care Act is that it's setting off enormous changes in the American medical care framework, with millions of additional individuals covered, large numbers of whom are in poor health and requiring a ton of care. The business has been shifting from a fee-for-service model to a value-based model. The fee-for-service model has doctors and the medical care industry bringing in cash each time they offer service to you. This isn't really that bad, as it offers motivation to the business to maybe arrange a larger number of tests than they need to perform a larger number of procedures than are truly needed to suggest more costly medicines. The value-based model focuses more on outcomes than services and can keep individuals healthier and set aside cash along the way. Doctors and hospitals, for example, can acquire more if their patients get better, stay better, don't get readmitted to clinics not long after being released, and more. This methodology can keep populations in a healthier state while minimizing expenses, allowing insurance providers to charge lower costs as well. Moving on to number 9, here's something you may not have known. Insurance is thousands of years old. It could be difficult to envision insurance sales reps and insurance structures and all that existed hundreds or even thousands of years back. However, that doesn't mean insurance didn't exist. Surely the main appearance of insurance in history allegedly occurred in China around 3000 BC. Merchants who depended on boat transport of products were in danger of losing stock in shipwrecks, so some grouped together and circulated their products across various boats, so one shipwreck would hurt each one of them a little, but however wouldn't convey an all-out misfortune to anybody. Modern insurance works similarly, with cash being gathered and pooled by insurance providers fit to be paid out through claims. Moving on to number 10. America's insurance history originates before the American Revolution. You might not have known about the Philadelphia Contribution Ship, however, it's America's most established, constantly dynamic insurance company, established in 1752 by none other than Benjamin Franklin himself. It was initially demonstrated on the English insurance companies that were set up after London's Great Fire of 1666, with some Philadelphians uniting to secure each other monetarily against fire harm. It ventured to such an extreme as to have building guidelines that covered properties expected to meet, and it utilized a chimney sweep to clean up chimneys for the insured houses. These are only a portion of the shockingly fascinating things there are to find out about the universe of insurance. The more you know, the more you might be able to save, and at least you might turn into the most fascinating individual at the gatherings you attend. So there you have it. Now you know 10 hard to believe and interesting facts about insurance. If you felt that you learned something new about insurance from this video, be sure to let us know which of these 10 facts you found the most interesting down below in the comments section. As well, if you feel that you are more educated on the topic of insurance as a whole, we would love to know that. Maybe even suggest what future topics you want to see a video on regarding insurance. We are open to all suggestions. If you enjoyed this video, please hit that like button, hit the subscribe button below, and click the bell to turn on the post notifications. This will let you know when a new video comes out, and it will also help us out greatly. Thank you for stopping by, and we will see you in the next video. Until then, it's been Insurance Reassurance, and have a great day. See you next time.